Thank you. Appreciate it, Senator Reed. So I want to take a look at another issue, and that is the rapid consolidation of our banking system isn't the result of some natural phenomenon like gravity, that it just had to happen. It is the consequence of deliberate decisions by financial regulators that have made it easier for big banks to grow bigger by gobbling up their competitors. One place where these decisions have the biggest impact is in the bank merger review process, which determines whether a bank can merge with or buy up another bank. So, Ms. Philo, you've seen this process up close, and so I thought maybe we could just walk through the basics on it. Let's go back to the bakery example here. So if I own a bakery and I want to buy another bakery, two little bakeries in two little towns, and I've got the money, I can just go buy the other bakery, right? I can cut a deal with the current owner. Owner wants to retire, I can buy the bakery. That sounds fine. But if a bank wants to buy up another bank or merge with another bank, can they just go out and close the sale the same way they would if it were a bakery buying another bakery?
Absolutely not, Senator. It's a very complex set of regulations and the guidelines. And as we know, banking organizations, not just the ultra large, are highly complex. So no, banks merging is much more complex. They need authorization from the relevant agencies, whoever is their primary regulator.
So they have to go to their regulator.
Correct.
They have to tell their regulator what they want to do, fill out an application to be able to do it. Okay, keep
A very
going.
elaborate application, I
Okay.
might add. There's a very intensive, as you know, focus on deposits, and yet there are a vast array of other things considered as well. And there's a period of one might expect as far, a year plus, where there's a review and an engagement with the regulators to review the merger. And,
Okay.
Yeah.
So assuming we have federally chartered bank here, which most banks are, so the three regulators, the ones that you might have here, the OCC, the FDIC, or the Fed, depending on the size of the bank and how the bank is, who's the primary regulator, actually has to go through, look at all this information, and takes a year or so to go over the books, to understand the local community, and to look through before there is any approval of going forward with this bank merger. Is that right?
That's correct. That's correct. There's also a DOJ review.
So there's more. That's not
Yes,
even enough
there's
by
more.
itself. Go ahead.
Absolutely. Once that's been completed and they've worked out the application, the Department of Justice also reviews the application for its competitive effects.
Okay. All right. So a lot going on here. So DOJ Antitrust Division takes a look at it after the banking regulators have, and they've both got to sign off before you can go forward. Okay. So we have established banks are a little different from bakeries. Okay. Got it. So banks file their application to merge, and both DOJ, Department of Justice, and financial regulators are taking a look. Now, the DOJ's Antitrust Division reviews all these deals and looks at them for anti-competitive effects. But a purchasing bank, the bank that's doing the buying's main federal regulator, that is their banking regulator, is ultimately responsible for approving or denying a deal. Is that right? So antitrust looks at it for its anti-competitive effects, but the banking regulator is the one who gives the final yes or no. Is that right?
That's correct.
Okay, just to make sure I've got this. So here's what I want to focus on. Since it's the banking regulators that have both the initial information and the ultimate say-so on this, what are the banking regulators looking at? You've been in this world. What is it that you would evaluate if you were a banking regulator and asked to approve the merger of two banks? Talk to me about the kind of things you would be looking at.
Absolutely. I think there's a great deal of discussion about deposits, and clearly that's a focus.
So you'd look at deposits.
Yes, but there's a great deal more. You would also, we've talked about the anti-competitive effects, but we'd quickly go to financial stability, especially for the larger banking organizations. We'd also go to public interest and the benefit to customers and communities. And then lastly, and these are in the guidelines and required, financial and managerial resources. So is the firm's, oversight and apparatus, the independent, and the lines of defense, is all that in order, and are the financial resources there?
Okay, so what you're supposed to look at is actually set out in these merger review guidelines, right? And as you say, it's things like, does it harm consumers? Can management really be counted on here to run it? Is the bank going to be stable? Is it going to destabilize the access to banking in the region? And if the regulators believe that any of those harms could be caused by the merger, what are they supposed to do?
They're supposed to factor that into the assessment.
Factor and then do what?
Into the assessment of whether to approve the acquisition.
And at least in theory, if there are problems, are they supposed to approve?
No.
That's what I want to make clear. This is what the guidelines are about. At the end of the day, they're not about saying, boy, there's a lot of problems, but go ahead. Right? Have a great time. Okay, so they're supposed to deny. So you outline this process that is designed to make sure that when a bank merges with another bank, that it doesn't endanger our financial system, it doesn't harm consumers, it doesn't harm small businesses and their access to credit. These are very important goals. So that suggests to me there should be a really high bar for approving a merger. And yet, let's take a look at the data. Somehow, the FDIC, the OCC, and the Fed, the three regulators here, have basically never seen a merger they didn't love. Since 2013, the FDIC has received more than 1,100 bank merger applications. And how many did they formally deny? Nice round number, 0. What about the OCC? Since 2013, the OCC has received nearly 500 merger applications. How many of these did the OCC deny? Answer, 0. And things don't look great at the Fed either. Since 2006 and 2021, a span of more than 15 years, the Fed has approved more than 3,500 merger applications and denied 0. In fact, out of the thousands of merger applications that have been filed over the last 20 years, just one, and that was last year, was formally denied by regulators. So let me ask the question this way. In fact, let's bring you in, Dr. Falkender. Is it your view that out of the thousands of mergers that have been approved over the last 20 years, that none of them or only one of them posed a threat to competition, a risk to financial stability, reduced options for consumers, more constrained borrowing for small businesses, or any of the other factors that regulators are required to consider?
Thank you for the question, Senator. I went to graduate school because I worked at a commercial bank and we got acquired, and that was what spurred me to go get a PhD. And I can tell you that what happened in that instance was that there was excessive consolidation in the area, and so what the regulators required was that there be spin-offs or sell-offs, divestitures of certain branches. And so it's a little bit more complicated that the mergers, that none of them are denied. Usually what happens is that if they're approved with restrictions like divestitures in order to make sure that there's still sufficient local competition.
And are we confident that that's exactly what's happened? So they've approved?
I agree with you. I've not reviewed every one of them. And let me say, Senator, I agree with much of I think my testimony revealed that I'm very concerned about the lack of local information that's lost with acquisitions. I just hope we get a chance to also, though, talk about that the biggest thing small banks suffer from is their inability to compete on technology. And so I think that where we could maybe have some conversation is how do we lower the cost of small and community banks competing with large banks on technology because of the economies of scale.
So I think that's a very important point, Dr. Falkender, and certainly something that I'm sure folks in the banking industry who are trying to run these community banks are talking about. But let's face it, as long as the big boys are out there gobbling them up, there's not much time to talk about how you spend energy and resources building up your technology. When you're getting swallowed up and the community banks are disappearing, as we see from the data here that they are, I think the consequences are pretty obvious, and I hope we can help the community banks. But part of this starts at the merger review level. So let me ask you, Ms. Philo, about your view about this. Of all these banks, for which only one in all this period of time was formally denied a merger approval, do you think that none of them posed any risk, or that there were enough other conditions put in place so that every one of the criteria were met that are laid out, the criteria that are currently laid out in the merger review guidelines?
I believe it would be hard to say that every single instance that we've had from historically going back so many decades would have met every one of them according to their specific criteria. I think that would be a stretch to imagine that.
Yeah. And I get it. People make mistakes. Regulators make mistakes. Human beings make mistakes. I understand that. But notice, if they're just random mistakes, there'll be mistakes in both directions. There will be some times when mergers will be disapproved that maybe would have been okay and not posed a risk, and there will be some times one will slip through that actually does cause harm to consumers or that cuts access to credit for small businesses. But when you see this kind of an approval rate that is effectively a 99.99% approval rate, you really have to say the system is tilted the wrong way, that we are not using a high enough bar in the current merger review guidelines. So let me just do one more quick one, and then I'll give this over to Senator Van Hollen. And that is to focus in on a merger review guideline process that has effectively become a rubber stamp. And the banks know that it's a rubber stamp. Sure, there may be a little bit of song and dance around, oh, we promised to do this in the local community, or we promised to do that, but no indication there's any particular follow-up on this. So in that context, President Biden, early in his term, called for tougher standards that apply real scrutiny to bank mergers. Ms. Harper, do you agree with President Biden that our bank merger guidelines need to be toughened up in order to keep both consumers, small businesses, and our financial system safe?
Yes, and it's very encouraging, both what we're seeing from President Biden and also from the Department of Justice Antitrust Division, that they intend to apply what is the statutory obligation, which is a holistic assessment of harms from any potential merger.
That they're actually going to follow the law.
That's a new idea, right?
There we go. So, Ms. Philo, how about you? Do you agree with President Biden on this?
Absolutely agree with President Biden.
Good. I'm extremely disappointed that when I asked our nominees to the Federal Reserve Board this same question recently, they refused to give a straight answer. I am seriously concerned that we are being presented with nominees to key roles regulating banks who cannot clearly state that they agree with President Biden that concentration in the banking industry is a serious problem. It is clear that our bank merger rules need to be tougher, and that's why I will soon reintroduce my Bank Merger Review Modernization Act, which would strengthen and modernize the Bank Merger Review guidelines so that regulators actually do their job of protecting small banks, consumers, and our financial system from unchecked consolidation. I'll keep pushing Congress to pass this bill, but this is one time that regulators don't have to wait on Congress. I am glad that banking regulators and the DOJ are following President Biden's directive to strengthen the bank merger review guidelines, which they can do under current law. Even so, It is time to get this review finished and get it out the door. We need our regulators to deliver even before those guidelines are out, and certainly once the guidelines come out.